and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Ross McElroy. Ross is Chief Operating Officer and Chief Geologist of Fission Uranium and Fission 3. Thanks, Ross, for being here with us today.
Good morning, Jeb. It's a pleasure.
Ross, the past few years, in 2014, you were given the PDAC Award for Exploration Success. Northern Miner gave you the title Person of the Year in 2013 for the PLS discovery. You've had a significant role in 4 major uranium discoveries in the Athabasca Basin. Give my subscribers an introduction into your career, your background, and what you're currently working on with Fission and Fission 3.
Sure. Okay. Well, it starts with the fact that I'm a geologist, and I've been involved in uranium exploration for about 30 years. When I graduated at a university in 1987, my first job was with Cameco. So I got hired into the uranium sector very early on in my start of my career. I was very fortunate to be involved in the discovery of the McArthur River deposit in the Athabasca Basin with Cameco, and McArthur River has turned into being the world's biggest high-grade deposit. So Cameco had some great geologists, and it's a very good basis for learning all the techniques for discovering deposits in the Athabasca Basin. They had geophysicists, geochemists, geologists, and just a wealth of people you could draw on, and we were very successful. I moved over to work for Areva after a few years, and Areva is another giant in the industry. This is a French conglomerate, and Areva was responsible for the Clough Lake discoveries, Cigar Lake discoveries, so other major high-grade deposits. And in the time that I was with Areva, we worked over on the west side of the basin and made the initial discovery at Shea Creek. I think what was important for me, working with these two giants in the industry, was seeing that uranium, high-grade uranium, is not unique to certain areas. It actually benefited me more to work for two different companies because Cameco was always focused on the eastern side of the basin. Areva, but more so in basement rocks and on the western side. I've been able to take, I think, the key points in everybody's philosophy. We started looking, I joined Fission in 2007. We had properties, we started focusing on properties on the western side of the basin where Areva had made the Clough Lake discovery, the Shea Creek discovery, looking for high-grade uranium. We were in a slightly different area. In fact, we're outside of the basin, but it was in the west, in the underexplored area. And we used techniques that, new and cutting edge and out-of-the-box thinking, just a whole host of other different ideas. And that led to the discovery of the PLF RRR deposit, which is basement hosted on the western side of the basin, and I think most importantly is that it's very, very shallow. So this is, because it's big, high grade, and shallow, it really lifts it quite quickly to the top of the pile as far as economically viable projects. And so not only did we open up a new area of discovery on the west side and finding it shallow, and this is what led to a lot of the awards that you've already mentioned, including the PDAC Bill Dennis Award, because it was a unique discovery in a unique way. We provided a different way of looking at things and just the quality of the asset, and that's what's led to a lot of the awards. So I've been involved in uranium for quite some time. We're trying new techniques, new ideas all the time, and we've been very successful at it.
Ross, you mentioned the economic viability of the PLS discovery. In 2015, you came out with a preliminary economic assessment, which showed the average OPEX of around $14 per pound U3O8. that really stands up as one of the top in the development projects. Could you talk to us about the importance of this PEA and what sort of credibility it gave to this project in 2015?
Sure. Yeah, I mean, we were extremely happy with the results that we came out with in the PEA, and it was in September of 2015. And I want to start off by saying that, when we chose a third-party engineering group to undertake the PEA study, the important thing to me was to get the most credible name on the street. So I wanted an engineering group that was absolutely the top of everybody's list when you're looking for credibility of engineers. This is what you want. We want this project to be able to stand alone. I don't want people to be able to shoot holes into it and say, well, they did this, they shortcutted here. Not at all. So we picked the group of the highest street cred, and that was important to me. Now, because we knew that we always had something very special in PLS to begin with. It's already the third largest deposit in the Athabasca Basin. It has the high grade that the Athabasca Basin is known for. It's in basement rocks, and importantly, it's so shallow. So we knew we've always had a high-quality deposit, so I wanted to get the highest quality group to look at this deposit. You're right. The fact that the numbers, the OPEX costs are so low, it's really not surprising because you're looking at a high-grade deposit that's so near surface. And the basic rule of thumb that I think your listeners should draw from is that, one of the key metrics is how close a deposit is to surface. The closer it is to surface, generally the cheaper it is to extract because you're not spending a lot of money going through and developing other rock outside of the ore body itself. You're into the ore body right away, you pull it up on ground. And this is really what sets PLS aside from every other uranium deposit in the world today. There are other near-surface deposits, but they're mostly in Africa, and they're typically very low grade. In the Athabasca Basin, there used to be high-grade deposits that are near surface, but they've all been mined out. So PLS is in a class all its own in an area known for its high-grade deposit that's only 50 meters below the surface. So that's why the OPEX is so low, because high-grade material, very near surface, plus the geometry of the deposit lends itself to fairly straightforward open pit conventional mining methods that basically make it quite economically attractive.
So, Ross, this PEA that came out in September 2014 was followed up recently before the end of the year with a major investment and offtake with CGN, a large Chinese company. Can you talk to us more about the significance of this recent deal with CGN? Tell us more about who CGN is and the importance of China securing uranium supply from fission.
Sure. I think to start off, generally just talking about China is the growth engine in the nuclear business. China has, when they look forward, well, China is the second leading, economic powerhouse in the world behind the U.S., also has energy needs that fit that bill as well. So China has huge energy requirements. The problem is China currently gets most of their energy from coal, so coal-powered generators. But when you're dealing with a population the size of China, over 1 billion people, it's an economic powerhouse generating, the need for generating electricity. Clean energy becomes such a key part. And so it's a major strategy of the Chinese government to start moving away from what you'd call dirty coal power generation and moving it over to clean energy sources. And that's where nuclear stands in. So the Chinese currently have under 2% of their energy met by nuclear. They're trying to target that to at least 15%. What that means is that in the next 20 to 25 years, China will have the most nuclear reactors of any country in the world. So it really is the growth area in our sector. So CGN is one of the two major Chinese utilities, there's CGN and CNNC. So, and both of them are more or less equal in size, and they're both building nuclear reactors and providing energy for the country. China needs to look for sources of uranium outside of their own country. They do have some deposits. They're not a lot known about them, but they're typically they're not big deposits. They don't have a lot of uranium, and they're low grade. And so China wants to invest in other countries where uranium sources are secure, and this is where Canada comes in. Canada is the number 2 uranium provider in the world as far on a country basis. And so we have that. We've got a secure mining regime, dealing with, say, dictatorships as you are in a number of countries in Africa. You've got security of supply. You've got high-grade, high-quality assets. And that's what the Chinese are looking for. That's what CGN were out hunting for. We've been in talks with CGN for almost 2 years now. And I think, at first when we put out a resource estimate in the early 2015, that really caught their attention. But it wasn't until we had the economic numbers to back up that resource estimate that we provided in September of 2015, that was really when CGN were quite keen to talk to us about doing a deal. They obviously recognized PLS as being the premier project in the world, and they wanted a piece of it. So the deal that we ended up crafting with them, that we announced earlier in January this year, was they'll take 19.9% interest in Fission. What that does, it gives us over $82 million, which is plenty of money to last several years. We have the best, most aggressive utility company out there, uranium utility company out there, supporting us, and it's a win-win-win all around. You couldn't pick a better strategic partner. The money that we have means that we don't have to go back to the market always trying to raise money, and that's particularly important in the commodity cycle that we're in right now, and stocks are depressed. People have to raise money at low prices. It's a very difficult environment. We don't have that fear anymore. With $82 million in the Treasury, we're good for a number of years, and I think that should allow Fission shareholders to be quite comfortable.
Ross, as we conclude, we have another minute left. Talk to us about some of the programs that you're going to be setting out with exploration-wise with Fission and Fission 3 in 2016.
Sure. Well, we're just about to embark on our winter program at the PLS site, so for Fission Uranium Corp. And what that is, it's a 10,000-meter program. We're focusing a lot of our attention on the newly discovered R600 West zone. That zone is not yet in the resource estimate, so we want to get to the stage where we're building a resource estimate on the 600 West, bring it in, and also see how that impacts the economics, which we think it'll impact quite positively on the economics of the overall R deposits. So that's one of the focuses. There's also a number of exploration targets that we'll be testing this winter. We think that we've got a very good chance of finding some more high-grade uranium trends on the project, and hopefully this winter will be a case where we do. In Fission 3, which is a separate entity, it's more of a grassroots project generator type company, and we've been picking up ground mostly along the edge of the basin, so again, using the same philosophy as we have at PLS, which is looking for shallow deposit targets, and that's why we go around the edge of the basin in geologically attractive areas to us. We're using the same technical team in Fission 3 to explore, and our track record is such. We've made 2 major discoveries in the Athabasca Basin in the last 5 years now, and that's a better track record than anybody else. And that's with the technical group that we have, and we think that we've got the right group and the right properties to make advancements towards another major discovery. And that's what Fission 3 is all about: finding new discoveries, new areas, attracting new attention, looking in places where others haven't done, just using the same philosophy that was successful for us on Fission Uranium Corp and the PLS. We'll be applying that to our other properties in